Hi everyone, thanks for stopping by. This short video is about one of the technical views of the current market conditions. As always, it's for educational purposes only, not providing financial advice here. The market has started off 2022 in a pretty interesting way. The last 2 weeks have seen some really crazy intraday moves, plus minus 4%. That's quite unusual. After reaching all-time high at the end of 2021, around 4,800, SPX dropped 12% at its lowest, and are now dancing around 4,400. This definitely has been one of the most volatile periods we have seen recently. The VIX index has peaked over 30, which shows how much uncertainty people are expecting in the near term. Many of you may be asking what we should be looking at right now from a technical perspective. One technical indicator you may want to be paying attention to is Fibonacci retracement and the support and resistance levels determined by it. To calculate the Fibonacci retracement levels, we need to define the range between a low and a high. We can select the low of the range to be a significant last low, which sometimes can be subjective. Another option is to start from the lowest low in a given look-back period. We're going to use the low since the end of year 2020, which is around 3660. The Fibonacci levels are then determined by the range between this low and last high around 4800. We can see the first level, 23.6% at around 45.45, was broken right away without any resistance. But the second level, 38.2%, around 43.80, looks like a pretty resilient solid support so far. Intraday, it did drop all the way to the 50% level, around 42.40, but really only briefly within a day, and it bounced right back. So one of the levels you might want to pay attention to is this 50% 42.40 level, which may be the next support if the buyers finally give up on the current 38.2% level. If the market continues to drop and even break the 50% level, it may drop all the way to the next level, 61.8%, at around 4100, and then in the next level, 78.6% at around 3910. So that's the further downside risk, if you are long the market, of course. Another possibility of the market move, of course, is that it will continue to be supported by the 38.2% level, and it may bounce back to 23.6% level sooner or later. And it may not stop there. It might just rally up to the previous high, 4800, and continue to skyrocket, just like the last 15 years. Market does what the market does, so both upside and downside risks are real possibilities. Note we selected the end of 2020 as start of the look-back period, during which the low for the retracement calculation is around 3660. We can go even further back and try to find other significant low levels as the low of the range. During the COVID crash, we see SPX reached almost 2200, which can be used as an option for the low of the range. Before the COVID crash, the high was around 3360. Though it's unusual to use a previous high, but it does not mean you cannot use it as another option, since it may be considered one of the most significant levels in the past. If we start from the low during the COVID crash, that's about 2 years minus a month and a half ago, actually about 480 business days ago. Let's say the look-back period to be 480 days, and take a look at the Fibonacci retracement levels. Okay, here are the new levels. We see if we choose the low during the COVID crash for the calculation, the current retracement has not yet broken the first support level, 23.6%, at around 4200. Not yet. So the market or the traders may not be looking very closely at the levels defined this way yet. However, the market itself and the people who are watching the market are both dynamic and subject to changes all the time. So should the market break 4200, we may be looking at further downside levels defined using the range we selected here. 50% around 3500 and even further down below 3000. If we start to enter a recession and a bear market, those levels may become significant and start being watched more closely by market participants. Okay, for now, let's go back to the levels defined using look-back period since the end of 2020. To recap, these are the levels we may want to pay special attention to. 45 on the upside, previous high around 4800. On the downside, 4240 is the next level. The math of Fibonacci retracement is introduced in another video if you are interested. And no level should be treated as a hard level, so you may want to consider using some volatility indicators to define some buffer for entry and exit. Average true range is one of the options, and is introduced in another video on this channel as well. This is a short commentary video on current market conditions. As always, it's for educational purposes only, not providing financial advice here. Trading comes with enormous risk and should be done with extreme discipline. Thanks for watching, and I hope to see you next time.